Hi, everyone, and welcome to Mish's Market Minute. I am your host, Mish Schneider, another week segment with another theme. So last week we covered electricity futures, electricity stocks, and all because we were anticipating that based on Elon Musk's comments that the electricity global demand could double in the next 10 years. We thought we saw some really good opportunities there, and hopefully you guys did well with that. There was quite a few stocks that have overlapped now with what I'm going to cover today, which is oil and energy, because as of Thursday, we saw a departure, an interesting departure between the stock market, which has actually now looked like it may have topped out a little bit here, which is a good correction that the whole market needs, while the energy and the oil market, which had already been basing, actually continued to go up on Thursday in the face of the market being down. Now, of course, the market's not down a lot on Thursday, but nonetheless, it is showing some signs of fatigue. So let's see what we can do in the oil and energy market. I'm going to cover a whole bunch of stocks. As always, I'm incredibly optimistic about how much I can talk about in a set period of time. But oil right now traded up around $50 a barrel. That is actually obviously a pivotal area, just like the Dow. 30,000 is a pivotal area. A lot of it's psychological. And this is in spite of announcements by country after country and oil company after oil company really looking to abandon oil in the future. So the question is why? And of course, there's a few reasons why oil would be reversing. One is just good old-fashioned short float. Just like the market gets saturated to the upside, something can get saturated to the downside, and there's cycles. And the oil has been in a down cycle for a long time. We had one good blip a couple of years ago, but really basically it's been down ever since. That's number one. Number two is there is some stress going on around the world. There's some stress with Russia, some stress with China, big oil producer and big oil consumer, and of course Iran as well, with a new administration coming in and a lot of the geopolitics uncertain. And then finally, a lot of these oil companies, would not be the actual future of crude oil per se, but the oil companies, as we know, a lot of them are turning to alternative energy and electric energy. And so that is another reason why some of these stocks have gone up in the oil sector. So we're going to cover a couple of the ETFs first, the U.S. Oil Fund, oil being another one, XLE, OIH, which is the oil and services, and then some stocks, Valero, Exxon, Marathon, oh God, some of these names just don't come, ConocoPhillips, there we go, Russia. Why? Because Russia's a big oil country to watch. Occidental, Apache, Noble, et cetera, et cetera, et cetera. And then we're going to end with first of all, a stock I myself didn't look at until today, which looks really interesting. We're going to talk about that. And then some oil tanker stocks. As you know, I've been very bullish in Scorpio tankers. If you've listened to this before, we have a long position. We're actually doing finally great today with that being up on Thursday, I should say 8%. So let's move on. Okay, so let's start with, actually we're going to start with OIL. And I like to use the underscore just so that I make sure that they agree. Now I have weekly charts set up here and monthly and daily charts set up here because I think it's good to look at things in two time frames. But this is OIL, and this actually has done better than what the USO has done, and you'll see why in a moment. This has long already had a bullish cross right here. In fact, I wish I had noticed this at the time. I wasn't really looking at this. So it's above the 10, the 50, and the 200. We have still a slight negative slope in the 200, but a positive slope in the 50, and you can see we popped over the 10 today, and we took out all this work. So you're really looking at 1340 now as a good area for this to hold, number one. And number two is if we go down here to the momentum indicators, of course, real motion is looking pretty special. And if we look here at the performance or the leadership of this, as you can see, it's also outperforming the SPY. So very, very interesting. Now, just for, I don't know if I'm going to have time to do this on every single chart, but I wanted to look at the weekly chart, particularly on this one, because of the fact that it's, well, okay, I can't move this, but you can see that we have a 50 week and a 200 week. So even though this looks so impressive on the daily chart, and this is why I wanted to show you this, is as far as a longer term move as we're looking into 2021, we still haven't actually broken out on a weekly chart in OIL, and you'll see when I show you USO even more so. So that means that if this is actually going to be a thing, and this isn't just some good short covering rally or new buyers coming in hopes that it's bottomed, then you will have plenty of opportunity to get involved as we get into 2021, because after so long of being hammered, this has a big upside potential. Now, if we take a look at USO, which is a much more highly speculated chart, this does not look like the last one I showed you, because here's your 200, here's your 50, and here's your 10. The 200 not only is a negative slope, but it's still trading above the 50. In a bullish phase, the 50 is above the 200 and the 10 is above the 50. So this is not what we call stacked, and certainly not sloped. But what is interesting about this is that you've now cleared this 30, let's call it 3085 level, which, look, if you go back and follow the line to the left, you see really is where it broke down from in April. While the rest of the market was coming back, this was really still tanking, which is interesting because people were really worried about the demand, number one, and number two is that's when we had that whole thing go to zero. So now that we're over this 3085, I think that's a good number to keep your eyes on. If you look at the momentum here, the momentum is doing very well. The last time the momentum was at these levels was way back here, back in the beginning of 2020. So this is a breakout in momentum. And then if we look at how this is performing versus the benchmark, if I can pull this up right here, you can see barely, I'm sorry, I'm just trying to figure out how to get this up. But right now you can see it's just now starting to outperform. So that's good. That's an opportunity as far as I can see. If we take a look at it on a weekly chart, which we must do, look at how bottoming this looks and how much room it's got to go. Now, of course, we always have to think about the ramifications if oil actually does really proceed to rally, especially if we can get up, say, closer to 40 or 50. What does that mean for the inflation? What does that mean for the food prices we've been talking about? What does that mean for the geopolitical situation? All these questions. Oil doesn't go up just like this. There's usually a good reason, and very often those reasons aren't very good for us. And of course, we all wind up feeling it at the pinch at the gas tank, but we also, by the way, haven't been using a lot of gas. So all of this could be interesting as far as what happens in 2021. I'm calling oil, besides the dollar, the wild card. Okay, so now that we've looked at those two ETFs, let's move on to the energy ETF, which is XLE, just to get a different perspective. So if we look at this one on the daily chart, you can see the 50 is trying to approach here, the 200. We do have some resistance going back here at 45, 65. And even though it's broken out right now, this is not my kind of trade particularly, because we're a little too far from all the moving averages. We're closer to the 10, but I'm always looking to give you stuff that has a more of a swing trade type of momentum to it, not only because the momentum is shifting, but also because it's just clearing a new phase. This is in an accumulation phase extended, but nonetheless, it is definitely interesting to see how well it's outperforming and that the momentum is doing well. So that means there could be more upside. It just wouldn't be something that I would particularly want to trade. And just for fun, let's just see what this looks like here on the weekly chart. I'm not going to do this for every chart, but since this is already in an uptrend, we want to see how it looks. So here you go. Here's your resistance that's going to start to come in around these levels. We're getting close. And that's really, to me, why the risk reward here is not great at these levels. Maybe if it got back closer to 38, I'd be more interested. All right, the other ETF is OIH, which is oil service. And right now, this too, in fact, this is clearing, or no, getting close to the resistance here. Another one I wouldn't recommend, but you know, this is from listening to me week after week after week. You should be able to look at any chart, particularly if you have the plugins, and say, what's happening as it's breaking out or not breaking out yet in terms of the momentum versus the price. And you can look down here, when this was actually starting to move up in early November, the real motion broke out before it actually did in price, and it gapped up here. So you can see that, but you still would have had a good opportunity on this gap against the 50-day moving average, and that's the point where I would like to see us getting into trades, not when something is already extended. Just want to point that out. Now, if we're going to move on from there, let's take a look at Valero, because this too made a nice big move. And again, same kind of thing. This actually did not have a divergence. It broke out on the real motion at the same time it broke out from the charts. But this day was really nice because it gapped up and then just kept going and has been going up ever since. But once again, we're now at the point where it's got to hold this 10-day moving average that you can see right here. That's at 57.57. It's trading a couple dollars beyond that. And we're starting to get more into the resistance level here. And the momentum is waning. I wouldn't say selling off by any means, but it's certainly waning. And of course, it's still very much outperforming the SPY. So a lot of this is to show you stuff I like, to show you stuff emerging, but also to show you how to use the ACP plugins to be able to determine, is this something I want to get involved now? Or should I wait for a setback because I've kind of missed the boat? And a lot of these stocks right now, I got to say you missed the boat, but I'm going to show you more in a bit where you haven't. So right now, this is another one, Exxon. Actually had some bad news and it ignored the bad news going up with the market. And the same kind of thing. We had the divergence here when this was going to gap over the 50, it was already clearing the moving averages here. So again, this is where I want to train your eye to look for, if you're looking at any particular chart of any instrument you're interested in, how you use this real motion is you wait for the real motion to diverge, whether it's up or it's down. Just like I've given you some shorts like Microsoft and Nvidia and Amazon, all of those are down, by the way, and the momentum told us first. Okay, so now let's go on to Marathon Oil. And this too, also very extended. You know, as we start to get close to resistance and further from support, these aren't the trades that I want to take. But let's take a look one, since we didn't look at the other two, because it's good to get a perspective from a longer term on a weekly chart. And again, it looks great. It made a huge move off the bottom. But in terms of where it's been historically, go look at back at 2011, 2012, 2014, where it peaked. This stock peaked up here at, looks like it was like more like $40 a barrel, $40 a barrel, $4 a share. And now it had that big drop in 2016. And again, we've had even the bigger drop here in 2020. So if we are going to be looking at any area right now, I would say a move closer to about 6 actually looks more interesting. This is a cheap stock when you think about where it was trading versus where it's trading now. Now let's move on to ConocoPhillips. This is another very popular stock. And again, nice consolidation. This one to me feels a little bit better, even though again we're nearing the resistance and we're going up in momentum and outperformance. The reason why is because we're actually spending a few days here in this price range between this high right here, which is 45.36, and this low right here, which is 38.83. So you've got about a $7 range here. So if we took out that range, you could probably use somewhere in the midpoint using that 10-day moving average to see if you can get a move up closer to what this high was up here, which was 49.67 or higher. And I'm sure if we look at the weekly chart, we're going to find the same thing, that this has made a nice move from the bottom, but it's nowhere near what we've seen out of the equity market. This is still very heavy in terms of its resistance. Now I want to show you Russia next. So Russia, look at this beautiful bottom here. This, by the way, so let's look at how this looked at real motion time. Again, so this is using real-time example in a theme, but also really training your eye to look at this real motion. And this means that I can't possibly look at everything. But when I do look at these things after the fact, I certainly wish I had looked at this, because you can see that you had an exhaustion gap down and then another gap up. So this leaves not an true island, because a true island means that it's usually a new high or a new low, but this is definitely an island bottom of sorts. At the same time, momentum was below the moving averages. As soon as it started to take out the moving average is when this took out the 200 and took out the 50. So you had a very clear risk and then another gap. And now you can see this thing is exploding. Momentum is exploding, and so is the outperformance of the SPY, interestingly enough. So now let's take a look at this one on a weekly chart. And again, if you look at this chart historically, we're nowhere near where the all-time high was in here, because you can just look back and see in 2011 it was higher. But we can see now that we still have some upside. Again, it's going to be a matter of risk. But if this can get up to about 26.5, that might be it. So that's another thing to watch. So I like to look at the country that moves up with the oil for more information, because if it sputters out, sometimes the country will sputter out before the actual stock does. And now let's take a look here at the next one I want to show you, which is Oxy Petroleum, another very popular stock. Obviously, all of these are going to look explosive because this oil market has exploded. But again, we're close, $3 away, but still getting closer to the resistance. So you always have to ask yourself, again, if we look at the weekly chart, it's going to show a same kind of situation. But we have to ask ourselves, is the risk reward worth it? If we can make $3, that means we don't want to risk more than $1.50, and that's not really possible right here. But again, look at our real motion. As this was still trading under the 50, this was clearing the 50 on real motion. Soon as you got this move over the 50, whammo. This real motion is extremely powerful. I know Keith explained it to you, but one thing I can't tell you enough is that momentum is an invisible indicator. You don't see it on a price chart. It's something we learned on the floor because we could see it on the floor. We could see prices go up, but the velocity or the number of orders or the just enthusiasm of the actual brokers start to wane. It's that kind of thing. Why it's so important, no matter what it is you're interested in for next year, to be looking at that real motion indicator. PBR is another one. This is Brazil. And this, by the way, also similarly looking pretty explosive, had a golden cross here, and also managed to clear the real motion before it cleared the actual 50-day moving average here. So all of these, let's move down a little bit here, because I want to show you a couple that haven't actually really broken out crazy yet. Phillips 66. I used to love to trade this stock. I haven't traded it in a while. And yes, we had the same kind of divergence in the real motion and everything. This one also is interesting to me. Let's take a look at the weekly on this one. Because now we've cleared the 50-week on this particular instrument right here, which gives you a really decent level of risk. I would say somewhere between 67 and 68. Is something to look at, and it could go up to 82. Now that's a risk we could live with, right? Because if it's trading at 71, we're looking at maybe a $3 to $4 risk versus another $12 move up. And that's why I wanted to show you this. So if we go back to the daily on this one, really that 66, let's even call it 66 using the 10-day moving average. I like if it holds here and continues to close over this high, which is, let's call it 70. So a move over 70 can give you about a $4 risk. And we want to see in this one, if it does continue, whether or not it can get up closer to like, well, we said 82 on the weekly chart, but if you look at the daily chart, we can even be looking at a move more like at 87, 88. So that's why I wanted to show you that one. Another one I wanted to show you here is FLNG. This is a marine transportation stock. So you know that I've talked to you a little bit here about the transportation stocks, marine transportation. In fact, I know I did a whole weekly segment on marine transportation as the part of the transportation sector that hasn't moved yet because it was so tied to oil and gas. Well, what's interesting that I read recently about a lot of these oil tankers is not only could they move oil and gas, but they could also move water. And I don't know if you've noticed lately, but the water chart, and that's the PHO ETF, I'm not going to show that to you right now, made new all-time highs with the market, but they're starting water futures trading on the CME. So anything to deal with water, whether it's distribution or transportation of water, is interesting. But since we're talking about oil and energy right now, this is also interesting to me because this went into a bullish phase here. It got close to the 50. And at that point, by the way, this too showed no divergence. But once this really cleared the zero line, it cleared the 200. So you had a really good opportunity here. And if we take a look at this one on the weekly chart, Look at this move. Was that a real move? Wow. This may just be a very thin instrument to trade, but it's more the idea of it. You can see, though, it cleared 6, and it doesn't look as pretty here, except that you have 3 weeks of consolidation. So really, at this point, you'd really want to take out the high from 3 weeks ago. So at this point, really, that would be here. You'd want to take out this high of 820, and that's really would be the area to get involved potentially. But what I like even better, and what I'm actually long, and what I've actually talked to you all about several times now, is Scorpion Tankers. And today, Scorpion Tankers is finally making its move. Now, remember, I showed this to you a while ago, and I showed you that we were having these divergences here where this wasn't over the 50, but the real motion was. And then it broke down and real motion went back under the 50. I actually lost some money on this particular trade because I had bought it before it cleared the 50. My bad. Always wait for that price confirmation. That was a good lesson. Always good to lose money to learn a lesson that you already know but forgot. As they say, the market has a way of humbling you if you think you're getting too smart for it. But then it had another divergence here where it was still under the 50. This time it cleared the 50-day moving average and we got long. So we're long this particular instrument a couple of times now. I keep getting in and out because I was nervous with it, but now we're long at over $1.30 under where the price is right now. But the more important thing is the question is, have I missed the boat? I get that question all the time. So in this case, what I like to think about with Scorpio Tankers, since I'm so intimately involved with this stock now, is it really needs to hold 1150. So that's going to be your area to look at for risk. If we get any kind of correction down back to 12, which I'm kind of hoping not, but if it does, that would be one thing. But if it doesn't, let's take a look at the weekly chart. Look at our momentum going up. It's starting to outperform. I'm really happy about this because, as I said, I waited and waited and waited. And look, I mean, if you think it looks expensive on the daily chart, all you have to do is look at the weekly chart and you can see this, if this thing really moves, you ain't seen nothing yet. It's got a lot of upside potential. What I like to do with these kind of charts is, in terms of a measured move, is when you have a peak bottom like this, you could do some work here, almost like an inverted head and shoulders for a while. And then once you get through this level right here, which is about 14, considering the low was all the way down here, let's see, the all-time low in this was more like around 6. So if you go to 6 to 13, that's an $8 move. So then you go 13 and 8. That's how I do it. You get 21, and that could bring you all the way up here. And you still would be beaten up. I'm just talking about projections. So if you can find a good area to buy Scorpion Tankers, I would certainly say I think it's got a lot more upside to go. Another one is actually called Tank, TNK. TK Tankers. This also, it looks a little similar to what we just saw with Scorpio Tankers. It cleared the 50. It had a big pop up on Thursday. And you can see now, if you go back to the resistance, right back here, this high was at 1338. Thursday's high, 1337. So that makes it kind of easy. If it breaks out through 1337, 1338, and you want to use a tighter risk, you can certainly use 12 in this one. It's actually almost the same as Scorpio Tankers, but the 12 in this case, or let's say 1175, relates more to this moving average here. That's the 10-day moving average. And even though the momentum looks good, we're not seeing a divergence of momentum like we're seeing with Scorpio Tankers, but that doesn't mean it couldn't catch up. You have your 200 here. Looks like it's going to approach the 200 here. And of course, it's looking like it's really outperforming. So these tankers have a really good opportunity. Let's take a look at one more. So this one is Transportadora de Gasor. So this is a South American tanker company. And I like to look at sometimes things from different countries, especially when they're publicly traded in the United States. And what we can see right here is this tried to break out, and even though it's holding today, this is much better in terms of its risk factor to the moving averages. In fact, it's getting a golden cross, it looks like, soon. And that's up at around 5. So this is another one to keep your eye on. You could see the momentum came off with the price, but it held the Bollinger Band. And even though the leadership came off too, that's also starting to outperform. And just let's take a look at this one here on the weekly chart, just to get some perspective here. This one was another one that traded all the way up to 21 in 2017, 21 and a half. And look at this. This is actually a really pretty chart because it's got a double bottom here. And actually, once it got through like 530, this is really when it looked like it was going to start to hold. So 530 is your good risk point. Through 6, you might want to take a shot with this one. Okay, so I hope that gives you some ideas about what to look for in the energy space and in the oil space. And of course, if you have any questions, put them in the YouTube area and I will be gladly answer them. Hope you enjoyed. Thanks so much. See you again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.